Hello and welcome. My name is Melanie Davies. I'm a licensed independent financial advisor. You can find more out about me on the Financial Advisors Register, linked in the description box below. It's important to know that all my content is general in nature and is considered general advice only. That means it's not specifically tailored for your personal financial situation. So if there's anything that you want to investigate further, always seek out an opinion from a qualified financial advisor to make sure that it's appropriate for you and for your financial situation. Also, my financial services guide is available to download from the description box below. In this video, we'll take a look at how to read and understand your superannuation statement. To make this easy, I'll walk you through a sample statement with realistic numbers so you can follow along as if it were your own. Number 1, personal and account details. We can see we have Alex Taylor, born in 1985. The membership number is there. The tax file number status is provided. Okay, so the first thing we need to do is check your personal details. If your date of birth or your tax file number is wrong, it will cause you issues later on, particularly at retirement. So tip here is if your tax file number isn't listed, you may be paying extra tax on your contributions. Number 2, account balance and transaction summary. Okay, we can see the opening balance, $78,500, employer contributions, salary sacrifice, personal contributions, government co-contribution, investment earnings, less fees and insurance, less tax, closing balance $89,860. So notice how the fund shows not just the balance or the total, but how it was built. So this breakdown helps you understand whether your balance is growing as expected. Number 3, contributions in detail. Employer contributions, $7,800. Now that would suggest, depending upon which year this example is, so let's say it's 24-25, would be 11.5% of Alex's annual salary. The salary sacrifice contributions, these are the extra pre-tax contributions Alex chose to make, which also reduce taxable income. Personal after-tax contributions. Now, because Alex is eligible, Alex received a government co-contribution. You don't need to apply for this. The ATO automatically pays it into your super account if you meet the eligibility requirements and provide your tax file number. So to be eligible, you must make a personal after-tax contribution, and the government will match a portion of your contribution up to a certain amount. So the tip here is always cross-check your employer contributions against your payslip to ensure your payments are up to date. Number 4, fees and costs. Admin fees, $120, investment fees, $480, insurance premiums, and we've got a total here. Okay, the fees may not seem large in a single year, but over 30 years, even a small difference can mean tens of thousands of dollars less in retirement savings. So the tip here is compare your funds fees to others using the ATO's YourSuper comparison tool. Now, number 5, investment options and performance. We've got the balanced option here, 70% growth, 30% defensive assets, the 1-year return just over 5 against a 5-year return. So this shows how Alex Super was invested and how it performed. Now, while the 1-year return is fair, the longer average return is strong. So remember, super is a long-term investment, so focus on the 5 and 10-year returns rather than one single year's performance. And also important to understand that there's not a single definition of what a balanced fund is in superannuation. Each super fund can have an option labelled balance, but it's the actual mix of growth like shares and property and defensive assets like term and cash deposits that can vary significantly between providers. For example, a balanced option might be 70% growth assets, while in another's it could be close to 50%. So even within those categories, the asset allocations to Australian shares versus international shares and property and infrastructure can look very different between two balanced funds. The options may not deliver the same level of risk or performance. So it's always good to check what the underlying investments are and asset mix. Okay, insurance through super can provide peace of mind, but it also reduces your balance. In Alex's case, $350 was deducted this year. Check to see that your cover matches your needs. So too little cover leaves you exposed and too much can drain your super unnecessarily. Number 7, beneficiaries. Your statement may also show you your nominated beneficiaries. This ensures that your super goes to the right person if you pass away. There's a little known but critical detail here about superannuation. Your super balance doesn't automatically fall part of your estate when you pass away. Under the SIS Act, the Superannuation Industry Supervision Act 1993, it's actually the trustee of your super fund who decides where your money goes, unless you've taken steps to make a nomination. Without a nomination, the trustee may distribute your balance to your dependents or to your legal personal representative, but you won't have control over who receives it. This can cause disputes and delays for your beneficiaries. Most Australian super funds usually offer 3 types of death benefit nominations. The first one is a binding nomination, which is a legally binding instruction the trustee must follow. It can be lapsing, so it expires after 3 years, or non-lapsing, doesn't expire unless it's revoked. And this gives you the most certainty about who receives your super. Non-binding nominations. You tell the fund who you'd like your super to go to, however, it's only treated as a wish. The trustee of the fund still has the final say and must decide who receives the benefit under the SIS Act. The trustee will usually consider your nomination, but they can also override it if circumstances change, e.g. a new dependent comes into the picture. Number 3, reversionary nomination. And that's on a pension account. And that's common if you draw a retirement income stream, an account-based pensions. You can nominate a dependent, usually a spouse, who automatically continues to receive the pension payment after your death. It's different from a lump sum payment, as the income stream just keeps going. So the tip here is update this whenever your circumstances change of marriage, children, divorce. So remember, unless you've got a valid nomination in place, the SIS Act determines who gets your super, not your will. Notices and updates. From 1st of July, the administration fees will reduce from $10 to $8 per month. Now, don't skip on these small little print updates, changes to fees, insurance and investment rules. All those things will directly affect your balance. Okay, the next one is projected retirement balance. The projected balance here is $416,000. So this projection is based upon assumptions on the contributions and the returns. Super funds will use different assumptions around wage inflation and future price inflation, along with varied investment returns dependent upon your investment strategy. So take these into account and other costs, for example, the administration fees, the premiums, tax, and so forth. So if the projected balance doesn't match the lifestyle you want, consider boosting your contribution. Even an extra $20 a week can add up significantly over time. If your superannuation statement doesn't have projections, try using one of the online superannuation and retirement calculators. I'll link to the BT one and also to the government superannuation calculator in the description box. The BT calculator also includes an age pension entitlement, so you need to look at that particular section and add in any other assets outside your superannuation fund and any other income you may receive from retirement, like, for example, share dividends or rental income. Centrelink have rules around assessable asset and income, and I'll link to more information about this below as well. Let's try for fun Alex on the BT super calculator. Okay, Alex is born in 1985, so is age 40. Salary is this, and we know it's approximately this due to the 11.5% compulsory employer contributions. So Alex's current superannuation balance is this. The calculator then allows you to slide the target income variable, and then you can see how it affects the longevity of the fund. You can also see from this section a potential age pension component to complement Alex's income in retirement. Hover over this part to see which financial assets and income form part of the age pension calculation. Now make sure you edit the assumptions and the age pension section to make it more applicable to you. And remember, there's further information on what constitutes Centrelink assessable income and assets below. Also remember, this is just a guide, a starting point. If this is something that you want to know more about, reach out to a financial advisor, Service Australia, or to a super fund. By carefully reviewing your details, balance and transactions, contributions, fees, investments, insurance, beneficiaries, and the projections, you'll have a better understanding of your progress towards retirement. And remember, superannuation is likely one of the largest financial assets you'll own after your home. So taking a few minutes each year to read your superannuation statement can make a huge difference in the long run. If you're finding this content helpful, don't forget to like, subscribe, and hit the notification bell so you can keep building your financial knowledge with every new video. And if you do have any questions or need personalised advice, don't hesitate to reach out to a financial advisor or to a super fund. As a reminder, all of my content is general in nature and doesn't constitute financial product or investment advice specific to your situation. Until next time, take care and thanks for joining me.